at the conclusion of this broadcast. Another thing the report shows is a clear correlation between the size of a firm's employee benefit audit practice and the quality of audit performed. Ralph's going to take us through that analysis.
Thank you, Ellen, and good morning, everyone. This particular audit, different from the one that was previously administered, I think about almost 10 years, 10 years ago. It broke down into 6 strata, if you will. Those firms that do less than anywhere from 1 to 2 audits, then 3 to 4 audits, 5 to 6 audits, and then 6 to 24, and then those that did 24 or 25 or more. Right. And so I think the one rising fact or interesting was the strata of those that did 1 to 2 employee benefit audits. And nearly 75% of the plans were deficient in some way, shape, or form for those who audited 1 to 2. So clearly size seems to matter in terms of whether audits are done correctly. And so that's a concern, obviously. 75% deficiency is just not acceptable, and with the overall rate being 39%, clearly that is not acceptable too for the entire study. I guess, you know, the first audit that we had 10 years ago, we actually, and by we, the New Jersey Society of CPAs, whereas one of 5 state societies that received a letter indicating that we had a high deficiency in terms of the audits done by some of our individuals. And we took various initiatives to try to address that with an enhanced employee benefit plans audit conference, working with the Department of Labor. But with this latest data, it clearly says that we still have a lot of work to do, because clearly a 39% rate is unacceptable, and certainly 75, upwards of 75% for those that do on a 1 to 2 audits is truly not acceptable in today's environment, and is resulted in the recommendations that have come forth in terms of that. We're very happy today to have Frank Boutelet, who happens to not only be a peer reviewer, but also has done employee benefit plan audits and just really understands this area a lot in this area. So I'll turn it over to Frank and to talk to you about some of the issues and some of the things that he's seen as a result of reviewing the report. Take it away, Frank.
Thanks, Ralph. The DOL audit, there's a couple things. I think they did a great job of preparing the paper that they did. It's about 200 pages. They really delved into data mining, understanding what the issues were. They got down granular to which firms are really, or which size firms are really causing some of the issues. 10 years ago, they didn't have that kind of stratification. But a couple things about the report that I just want to mention that I think is a little misleading. The first thing, and I'm a peer reviewer, so I'll get to the second thing, which is on the peer review issue, which I take exception to on some of it. The first issue is on $653 billion of employee assets are at risk. That's what the report stated. And I think that's a little misleading because most plans, they have their money in a qualified custodian. And the qualified custodian has audit procedures, has internal controls. So I don't think that it really is, it was a little misleading that they stated that those plan assets are at risk. I also, the second piece is on peer review. They came out and said peer review is not working because a lot of these firms had gotten clean peer reviews. And so if they got a clean peer review, but we found deficiencies, maybe the peer review process isn't working. What they didn't do, and since they have the data, I'd like to see them go back and see which firms are peer reviewing the smaller, not the smaller firms, but the low volume review performers. It's my contention, I think there's low volume peer reviewers reviewing low volume performers. And when you have that, you're going to have someone who doesn't really know all of the rules about peer review, and what they're doing is they're reviewing someone else saying, hey, they did it like I did, so it must be right. And we're finding out that that's not actually correct. Now, another huge issue that we found with the peer review, the DOL did a study with the AICPA. They started finding that there were firms that had deficiencies, and they looked at their peer review reports. And when we looked at the peer review report, they found out that these firms were not having their peer review, the peer review of their pension plan. They weren't notifying their peer reviewer. The problem there was about 1,000 firms, and the problem there was Those firms were not properly reporting. They had to have a recall of their peer review, which causes other issues here in the peer review process where we have to go back out there and redo that work. Now, when a firm does that second go-round on a peer review, if that peer review is clean, the AICPA has a mandate that they will now have that peer review oversighted to see whether, in fact, that ERISA plan was reviewed properly. So that's where the report's coming from. Now, I do think that that what happens typically is a firm. I know I used to have a small practice before I merged into Williams Smith & Brown, and we did one ERISA plan. But I spent a lot of time in CPE, taking just as much CPE as I did to perform the audit. What's happening is there's a lot of firms out there that have a client that grows to a point where they have 100 employees, they need a pension audit, and they decide, hey, how hard can this be? I'll do the audit, not really understanding there's a lot of differences on a pension audit versus a regular audit. You have a lot of participant testing, which is where I think the firms failed, not so much on the investment side, but did they test the participants to make sure the participants were qualified to be in the plan, they were authorized, were they, did they get the right payments out? So those are the things that I think is the nuances for pension plans that normal practitioner would not know. Right. So that's the issue I think has to be addressed going forward.
Frank, what about audit fees? Is there any correlation to the audit fees that are charged? And in the past there's been a lot of conversation that, well, some of these audits were being done for very small fees, and therefore that might be a reason why all the base paths weren't being touched.
I think their study found there was no correlation with audit fees. I think they found that it didn't really matter. I think what really mattered the most was that there were firms that were doing one or two audits that didn't really understand what it was. In fact, I sit on the AICPA Joint Trial Board, and we had a practitioner come forward, and I think this is the crux of the problem. He didn't have his peer review looked at. His peer review didn't include his pension plan. And when he came in front of us, he brought in the audit manual for auditing pension plans. But his contention was, I didn't know that a limited scope, which Ellen referred to earlier, was in fact an audit. Mm-hmm. So he said, I didn't know it was an audit. So when he sat across from me, I asked him, I said, you brought in this guide. What is it? It says audits of employee benefit plans. And he said, yeah, but I didn't really think that it really was an audit. And I think that's the problem, is that practitioners don't realize that even though it's a limited scope and the wording says that we have audited or we couldn't finish the audit because of this limitation, that it really is in fact an audit. So that's where the problem is coming.
We've talked a lot about the perspective from the public accountant point of view. So what about the CPA, who's the chief financial officer? What do companies need to look at in going forth now with this report being out?
Well, what's happening now is the plan sponsor has a fiduciary responsibility to hire the proper professionals to administer the plan, to hire proper administrator, proper accountant. In the past, there were sanctions against plan sponsors for not having the audit done, not having it done properly. So their responsibility is to make sure that they're finding a CPA that does these audits properly. And even if it's a firm that does one or two, they should delve deeper into what is their peer review. Has the review been done recently, or is it a 2 or 3 year old peer review? Because it might not have been encompassed in the inspection. So make sure that they have a firm that does that, and then ask the questions about the firm, of what their experience is and what kind of work that they do. I think that's the responsibility for the company, to make sure they're hiring a qualified practitioner to do the audit.
Frank, if I could, you mentioned that you were on the joint trial board, and you had a practitioner or CPA come before the trial board, and he really didn't think that this limited scope audit he was doing was an audit. So what are the ramifications for individuals who fit in that bucket, who are doing employee benefit plan work or audit, but it was not put up for peer review?
Well, they have to have their peer review recalled. They have to now go through that process. So that peer review they had issued comes back, it's no longer existent. So if they're doing government auditing as well, they might have a problem from the government side of having that audit done. Now the peer review comes out, and a full-blown peer review has to get performed again. And again, that peer review will be more scrutinized. If that ERISA plan is a clean ERISA audit, it will be oversighted by the administrating entity. And I'm on the peer review executive committee of New Jersey, and again, when we do have these come through, it's our responsibility now to go back out and pull those work papers from that firm to make sure, in fact, that that audit was done properly, which takes more time, more effort, and more cost to the firm.
Yeah. Now, will the CPA and the firm be subject to any sanctions or restrictions in terms of their practice privileges because of a situation like this?
It could be. The DOL now has some recommendations that they have in their paper as well. One of the things they want to do is they want to go after the responsible party. The responsible party is now the CPA to do the proper audit, and they're looking at $1,100 a day fines for not performing a proper audit. $1,100 a day.
Whoa. Okay.
So it's going to be substantial. So this is not something that the DOL is taking lightly. The AICPA is working with the DOL and the state boards of accountancy now to put sanctions in whereby there's a potential you could also lose your CPA license if you're not performing a proper audit. So there's a lot of ramifications to not doing the work correctly. And I think going forward, we have to look at that. The practitioners have to look at, why am I doing this work? How substantial is this to my practice? Should I be doing it? And then from a peer review perspective, we have to delve deeper into what these firms are doing, making sure that they're following all the standards properly, and then immediately report that to the AICPA, and then they will then take that to the next level to the State Board of Accountancy.
You know, we're really lucky that we have somebody like Frank here that has such knowledge. So feel free to certainly send in any questions that we can answer either during the broadcast or get the answers after broadcast. You know, following along the line of audit quality, certainly AICPA and the NJCPA are committed to enhancing audit quality. I think that goes without saying, but I said it anyways. There we go. So for the past couple of years, audit quality really has surfaced as a focus around the globe for both public and private companies. In August 2014, the AICPA published a discussion paper, and they were seeking feedback from practitioners and other stakeholders on ways to accomplish audit quality. They received more than 800 comments from attendees at conferences, through research, surveys, and other forums. And as a result of this feedback, they published a 6-point plan to improve audits. Now, Frank, I know this is a subject near and dear to your heart. Can you touch on some of the points, you know, all 6 if you want, but you know, what do the people watching this need to know about this?
What they need to know, thanks, Alan. What they need to know is first of all, the AICPA is taking this very seriously, and this 6-point plan started before the DOL's report came out. They knew that this DOL report was in the making, and also they were looking at some internal oversight that they were doing all along on how firm quality was on the peer reviews. And they have the 6 points that they're dealing with: is pre-licensure, standards and ethics, CPA learning and support, peer review, practice monitoring of the future, and enforcement. Now on pre-licensing, what they did, and I like what they're doing here, is they're looking at trying to work with the college boards to institute a advanced placement exam or course, so that some of the students can get credit for college. And what they're looking at there is getting the best and brightest in the high schools to start moving them towards becoming CPAs. We know going forward we're probably going to have a shortage of CPAs down the road, so they want to get more of the best and brightest into the profession. One good way of doing that is getting them in the high schools to start taking advanced courses. The next area they did was on standards. What they have put in place is they're developing new tools designed to improve practitioners' compliance with the quality standards. Also, they reorganized the Code of Professional Ethics to make it a little bit easier to understand when, in fact, you might be not independent with respect to a client. So it's all, they had gone over the last couple of years, we've seen a lot of the standards being codified, and they've done that with the professional conduct, make it a little bit easier for us to figure out whether or not we're independent or not. On the CPA learning, they're now looking at how we learn, and they're looking at these nano-learning, and maybe a little bit later we'll talk about that. But they're looking at, we learn differently now. 8 hours in a course all day is too much for somebody to take in all that information. So they're looking at other ways that what we need to learn and how we should be putting that learning out. On the next one, I'm going to jump down to enforcement. I mentioned this before. They're going to AICPA is aggressively going to look at the investigation and referrals to the state boards of accountancy. Again, they want to coordinate with the state boards to now put a little bit more teeth behind the fact that firms aren't performing the proper audits. The other two on peer review, and again, this is near and dear to my heart since I spent a lot of time on peer review.
No, you.
I do. I actually spent 3 years on a peer review board, and I wish I was on now because there's some really good, exciting things going on that I wish I could be a part of. And I think they still ask me some questions. So, and I think what they're doing here is looking at to try to improve the quality of the peer reviewer. They want to make sure that the peer reviewers have the necessary skills to perform peer reviews of other firms, so they have the knowledge, and they want to also kind of weed out the low volume reviewers of some of these high profile areas such as broker-dealers, government auditing, and pension audits. So they're looking at that as well as trying to institute something there to make some changes. And then lastly, the practice monitoring of the future. They had put out a white paper recently where they're looking at a futuristic look at how peer review should be performed in the future. Now, peer review is approximately 30 years old, I think. It went back to the 1980, in the mid-80s, I think it came out. I had just started my career back then when we had our first peer review, and it was pretty similar to the way it is today. So 30 years, we haven't seen much of a change in how peer review is performed. So what the edict was to a group of practitioners was, forget any walls. Just go out there and come up with, using technology, a way to monitor ourselves. And no holds barred, just figure out a better way. And that's what this paper was all about. So I think we're going to see different peer review going forward, which hopefully will alleviate some of these issues that we see.
So Frank, somebody did send in a question on peer review. And it says, is there a peer review checklist available? I don't currently do pension audits, so I'm not sure what the direction of this question.
Well, first of all, I think the question, if there are third-party practice aids on performing pension audits, but the AICPA also has a website for peer reviewers where you can go in and get checklists that the peer reviewer uses.
Right, but I'm not sure that that's what.
So can you read that again?
Is there a peer review checklist available? I don't currently do pension audits, so maybe it's what one would be looking for in a pension audit.
Okay, yeah, a peer review checklist, like I said, the AICPA has a checklist that peer reviewers use to peer review other pension plans. So there's a full checklist that you would use that would hit all the points that you should have in your audits of pension plans.
And there's also a checklist just for peer review of other types of audits, so that I think maybe that might be what the question is being asked. Is there a peer review checklist of the things that one has to
regular
go
audits?
through?
Okay. Maybe that's it.
Yeah, there are. I mean, again, the AICPA website's a great place to go to find what your peer reviewer is going to look at on your peer review. All the checklists are listed there. You can pull them out, go through them. There are a lot of CPE courses on how to prepare for peer review. I actually give a couple of courses myself. The AICPA has them. I know the State Society has a few as well. Attend those courses so that you know. So peer review is not a scary thing as people think it is. But it's meant to make sure that we're all following the same standards, so it's a level playing field.
Right.
And again, the public interest must be protected.
Here's an interesting question.
One thing, when Frank was talking about the 6-point plan, and was with regard to pre-licensure, one of the other key facets in that is going to be the change in the CPA exam, which we'll talk a little bit more about, but a change to test more from a competency standpoint as opposed to a compliance. And I think that's important too, because when in doing these employee benefit audits, I think there has to be a greater level of skepticism or critical thinking applied to it.
Absolutely.
So just what I want to get that in to tee folks up for what we're going to talk about later.
So Frank, you mentioned it's the company's responsibility to make sure they're hiring qualified CPAs to perform special purpose audits, in this case, ERISA. In this economy, many companies are looking for the best cost proposal. Shouldn't there be more responsibility placed on the auditor to make a proposal only for jobs they are qualified to do? Now that's a...
Yeah,
I can give my 2 cents, but you go first.
Well, I'm going to hear yours first.
Well, I'm thinking in most cases what happens is, I think you gave the scenario, they're doing an audit, you have a client, they now get, they reach that 100-member threshold in their plan. The thing is to just ask your current auditors, can you do this?
Right.
And you want to serve your client, so you say, sure, I'll do this for you. As opposed to, I could clearly say from this question, if they go out for bid, then yes, you should not be proposing if you're not qualified.
Right, absolutely. I mean, first of all, firms should only do work that they're qualified to do. We have an ethical responsibility to do what we do, and due diligence. Now, you can take on an engagement without having the knowledge, but then you have to go out and get that knowledge. I agree with most of the question is that if they have a current provider, they should ask the provider, the CPA, do you do these audits? What is your experience with these? But the practitioner, it's really responsibility on them. And the DOL and the AICPA are now looking at putting sanctions against the practitioner for not performing proper audits. So I think that's where you're going to weed out some of these firms that aren't doing the right audits. What will it do to costs going forward? Not really sure. I mean, I think some of the issue in the past has been that some of these low volume auditors have been performing audits at a low fee. So some of these firms may have to go out to a proposal, may have fees going up a little bit because they're using a provider that does a lot of these audits, that are taking the proper training. I mean, at our firm alone, we do a lot of pension. We do about 300 pension audits. We have a lot of training that goes on every year, and we have groups of people that's all they do is go out and get training, and they perform these audits. So we're kind of moving towards where a group of people will do that work rather than just have the general. I handle about 10 myself. But we do have, most partners will handle at least 10 or more. Okay. Anyone that does 1 or 2, we kind of get them out of that practice and move it to a partner that does more of that work because of the fact of the issues that are out there.
Okay. Go ahead, Ralph.
Well, the whole audit quality issue is one that's under review and being explored, and I know the society issued a comment letter on that. So Frank, could you speak to the concerns expressed by our peer review executive committee here at the society?
Yes. Yeah, the peer review executive committee, the practice monitoring of the future, when that proposal came out, or exposure draft, our peer review executive committee came out with a response. And I like the fact that all of our committees at the society will respond to these exposure drafts. And they looked at, and they had some reservations with this practice monitoring of the future. Again, this is a major change and overhaul to how peer review is performed. Some of the things that we had issues with were the continuous analytical evaluation. They were using benchmarks. And I think the problem that we had with that was you can't benchmark how many hours, and it was going into how many hours each person in the audit should spend. For instance, the audit partner should spend 10% of the time on the audit. And that's hard to cross the board say if it's less than 10%, a red flag would pop up. And that's what we're talking about, red flags here, where there's a dashboard that would be out there where the firm can see, and certain triggers would trigger a red flag. And one of them was if the audit partner has less than 10% hours. And I have some really good, strong senior managers in my firm that will be partners soon. Well, they're reviewing from a high level, so I don't have to get into the granular level on some of the areas, but I will audit and look at the riskier areas. So my audit time might be less than 10%, and in other areas where I'm using less experienced staff, I might have 15%. So there shouldn't be a correlation to that, and that's one of the issues that we had there. Another one was there was this external seal that they were talking about, where they were going to put out a red flag that you got a seal that if your engagement was proper, you got a seal that said you're doing it correctly, because they're looking at from a one point in time rather than your quality control process, because peer review is about your system of quality control. Is it in place to make sure that you have less of a propensity to get something wrong? And so taking a snapshot on one particular week or one engagement isn't going to give the oversight that you're doing it right. So we had some issues with that as well. And the other issue was technology. This is very sophisticated technology that firms have to now adapt and adopt into their firms. There's going to be a cost to that. And we're hearing firms already talking about costs for peer review being extensive. Now we're going to have cost on how much it's going to cost to implement this whole system into place. So that could be an issue down the road. So we wrote this letter and we responded. And I think it was a good letter, and hopefully the AICPA sees that and will take heed to what we say.
I think important for our viewers to know is that on July 7th, we are running a course here in Roseland at the Society on how to prepare for peer review. So it might be something well worth looking into, right, Frank?
Yes. And if anybody has any questions, you can always reach me afterwards. I think at the end of the slide you'll have my contact information, and you can find me. I'm all over the internet.
Hopefully in good places.
Hopefully.
So we have somebody like Frank who has this expertise here on this, because employee benefit plans is really a tricky area, and I think sometimes many of our members underestimate what's required there to really do an effective audit. Right. And I certainly don't want to get any more letters from the Department of Labor talking about us having a very high rate here in New Jersey. So we're certainly going to do everything that we can. But I think the key thing is, usually at our conferences and programs, we get the people who are doing it right.
Yeah.
And it's tough to get those who aren't doing it right, or who think they're doing it right but really aren't doing it right.
Absolutely.
So we really got to work on getting those folks out, because they will truly benefit. And I think next time the Department of Labor does a study, hopefully, But I think one of the things, and I just want to interject here, is that these are the kinds of things that keep folks at our staff at the society up at night, when we have these kinds of situations, because then it means that, the regulators come in and think about additional things that they can do to put a fence around these issues, and it results in, many times legislation or regulations that are over the top, and then put more of a cost or strain on our members in terms of what they have to do to be compliant. And so this is why it's so important that issues like this are brought to the table, so that you understand some of the downstream ramifications and consequences that come about as a result of that. And then it means more work for us.
It does. And also what it does too is the firms that are doing it right are now being almost penalized, because they have more restrictions on what they do and more oversight. And that's not always the right correlation. Right. So,
but that's the reaction of regulators when there's a problem. Their first thought is, how do we get this thing under control? And so those are a lot of the things that happen. That like I say, they keep me up at night.
All right, gentlemen. I think let's switch now to New Jersey outlook. Ralph, you want to kick us off with what's going on in the budget?
I wish I knew. It's been sort of quiet on the home front, but we do know that by June 30th, a budget has to be signed. And I think, certainly one of the things we were hoping to see be addressed in the whole budget process was some sort of reform of what we refer to as the death taxes, the inheritance and estate tax. I had the pleasure of sitting down with my colleague, Michelle Sakurka, from the president of the New Jersey Business and Industry, and we talked about a number of things, but one of the things that Michelle talked about was death taxes, and I think we have a video clip that we're going to tee up and show to our viewers about some of that conversation that Michelle and I had.
Been going around the state, obviously meeting with our members, doing a lot of I've been going around the state, obviously meeting with our members, doing a lot of speaking.
A lot of town hall meetings you've been doing.
A lot of town hall meetings through our Employers Legislative Committee. And every single one of them, at the end, someone comes up to me and says, I'm on the verge of leaving the state, and here's why. In fact, one of what I'm sure is one of your members, I had a discussion with an accountant yesterday morning who wanted to talk to me about death tax. And I thought he wanted to talk about statistics. I thought maybe we had one of our stats wrong or something. He says, no, I'm a forensic accountant. I don't do that side of it. He said, but I need to know something. He goes, I read all your information and your data on outward migration. He goes, why aren't they listening to you? He said, because I'm going to be a statistic. I already bought my house in Florida, and I don't want to have my, 186th day out of the state, but it's coming.
It's amazing. I had a call from a member, and I saw it was a Florida number on the message, and I said, okay. My first reaction is, what did we do wrong? And he said, I just want to know what's happening on this reform of the death taxes. He says, because I'm trying to calculate and make sure I hit the 6 months in a day, and I want to, because I really like to stay in New Jersey, but if this isn't happening, I got to do this.
Yeah,
because
every day we hear it. It's terrible.
And it's just more and more. But having been down in Trenton and talking in the state capitol to some of the key movers and shakers and the players, they all seem to just say, that's not why people are leaving.
Well, let me give you another perspective on that. Small business again. Okay, in New Jersey, large majority of small business are family-owned business.
Yes.
When a business person does their business planning, succession planning, okay, their succession planning is their children because they want to pass it in the family. Another example, while I was around, I had into one of my meetings, I had a businessman come up to me. He introduced me to his son. And he said, this is my son, I really would like him to continue the family business. He said, however, if I drop dead tomorrow, he's not going to be able to sustain it because he and my nephew are supposed to run the business. And between the estate tax and the inheritance tax, they're not going to be able to afford to keep the business running.
Absolutely.
And that's the story we're trying to tell. So it's again, it's not just about the rich people and getting the fair share from what is the perceived rich people. It's how are we impacting business? And this gentleman said, he goes, I'm not transferring my business here in the state of New Jersey. I'm going to take my business out. So what do we lose with that? We lose the taxable income. We lose the property tax because business pays 44% of property tax in the state of New Jersey. We lose the jobs. The worst, we lose the spending power. All these folks who are on the verge of retirement built all their affluence in the state of New Jersey.
And they're going to take it
and
elsewhere.
they're going to take it and spend it in another market.
Right. And that's and it just boggles me when we have these conversations that they don't look at the whole. You know, this on a holistic basis of the implications. They center in on one particular piece and try to work the issue down from there.
Well, absolutely. And this year it was, so taking it into the budget, this year the statement was we can't afford to lose $400 million in this budget cycle, which is what they calculated, taking the threshold up of the estate tax. To which our response was, well, let's see, we lost $8.7 billion between 9 and 10, and we lost 15.7 between 2000 and 2010. $15.7 billion in taxable income because of outward migration of people who left the state. If we had that taxable income in our general fund today, we wouldn't have the problem.
So I don't know. It's as you say, it is mind-boggling about that, how they just don't look at it.
So you can see, Michelle and I had an interesting conversation about the death taxes, and we also talked about a number of other things. We talked about the gas tax and the need for funding of the Transportation Trust Fund, and about rethinking of how we do that, because in the past the monies have been siphoned off and diverted to other areas, and so as you may recall, so many of you, the Society did an op-ed. I did an op-ed on the gas tax and got a lot of interesting comments and a lot of interesting support. But I think the key to it was a compromise package where the transportation fund would be addressed, and addressed from the funding standpoint, and also addressed from the standpoint of where the funds are utilized, making sure that they're used truly for infrastructure improvement, and at the same time offering that we do something to reform the estate and inheritance tax, because our survey that we conducted indicated that our members feel that their customers, their clients are leaving the state because of the estate and inheritance tax. We get calls about it. I think Michelle mentioned in the video clip as well that she got a call from one of our members asking about where things were on this. Right. So clearly, and I think in our first business roundtable that we just had at our annual convention, we had a number of people there. One was Senator Stephen Oraho, who actually has a bill in to reform the inheritance and estate taxes. And he said he would be supportive of a compromise package because it's the right thing to do.
You know, Ralph, as a practitioner, I have a responsibility to my clients to advise them on these issues.
Right.
And I have a hard time telling them not to leave the state because of the way the taxes are. So I feel guilty for doing that, but I have a responsibility to my client who's paying me. So we need to, band together and fix this.
Absolutely. The other thing that's hot in the news has been the recent ruling by the Supreme Court regarding the pension obligation. Previously, a lower court decision said that the governor needed to step up and pay, or that the administration needed to pay the full pension payment this year, which was a huge number. But the recent ruling in a 5-2 decision was that the Constitution trumps the legislation that was passed in 2011, meaning that the responsibility of producing a balanced budget, which is mandated in the Constitution, trumps what was laid out in the legislation in 2011 about the pension obligation. So more to come on that, because there's been some bantering back and forth. Obviously, the Senate President, Stephen Sweeney, is not happy that the obligation hasn't been paid. In fact, he said, well, the state is able to, maneuver around this, but pensioners or employees have to pay into the pension plan, and they're starting to pay in. Another issue that we're working on, and we've been working on for a long time, almost it seems like an eternity, has been the appeal bond cap. And why. So we just did an article of why New Jersey needs an appeal bond cap. Again, if we're going to improve the business landscape here, we have to create an environment that is not so litigious here, and that's what needs to be done. Currently in New Jersey, we don't have an appeal bond cap for traditional businesses, litigation, but we have one for tobacco. And so we really need to do something in that regard. Many of you have probably heard some conversation about speaking with one voice. It's an initiative that we at the Society are trying to bring together our business alliance partners, because we feel that if we talk as one voice on 2 to 3 issues, that we will have a better time getting our message over, getting the concerns over, and a better chance of getting those issues through. Because currently we now all reach out to the administration and lawmakers separately about different issues. And I think that really defeats the purpose. I think speaking as one voice, so that's something that we're working on. We're going to be having some more conversations with our business alliance partners. In fact, at our business roundtable at Atlantic City, we talked about that. And Tom Bracken, who's the CEO and president of the state chamber, indicated that they were going to be putting together an event in the early fall, I think September timeframe, to try to bring all the business groups together to talk about the issues and really hone in on 2 to 3 issues that we could work with lawmakers and the administration to try to get through. And then the other thing that we've been working on and that's important is our advocacy research. We've partnered with In Public Affairs to reach out to our members to take a pulse read to see whether the society should become more proactive in this space and be a voice for our members and also for the business community. And the preliminary results are that we should be that voice. Our members want us to be there to address issues, be an advocate for issues that impact the CPA profession. They think we should have a larger presence on statewide policy issues, and that we should clearly develop relationships, strong relationships with other business and trade associations. So I think at least the preliminary thing says we should be moving forward.
Well, it validates what we're doing.
Absolutely, absolutely, without question. So that research will be concluded in a little bit, and so we hopefully we will continue to get that strong recommendation to go forth so that we will try to take a lead and be more proactive as opposed to being reactive. It's tough chasing the train out of the station. We want to be on and help drive the train.
Kind of not a question per se, but this came from a viewer. Just an FYI, I attended a CPE course on estate planning, and the speaker said the best tip he could offer was to move out of New Jersey. So there you go.
Absolutely. I mean, back to Frank's point, it's a fiduciary responsibility for our members to advise our clients on those strategies. To not do it really would subject the practitioner to possibly some malpractice issues. So it's a terrible thing to say, but you hear it all the time. And as I said, we get at least a call or 2 a week asking us where things stand on this, and because people are trying to manage their 186 plus a day, whatever the critical number is, to not have to be subject to taxes here as a resident of New Jersey. So more to come on this. Certainly stay tuned for what's going to be happening on June 30th. And so let's jump into, let me say, one other important fact, I don't want to forget this. Part of our strategy is also that on Monday, June 22nd, we'll be down in Trenton with the other business alliance groups talking about a recent issue that has come to the forefront, and the millionaire's tax. As you recall, or may recall, and if you don't, several years ago, there was a surcharge, a millionaire surcharge, which was really not for millionaires. Right. It was for anybody that had $400,000 of gross income, and it was a staggered surcharge. And that issue has come back because of the budget issues that we're experiencing here. And so the business alliance groups are going to come together and talk with lawmakers that are going to be present there. And the society has been asked to be one of 3 business groups to speak on this issue. So again, it's our way of getting out and getting in front, being more proactive to speak on this issue, because we think we're real good, very well positioned with the fact that our members represent businesses from all spectrums. And again, this is not just an issue that affects the top echelons out there. So stay tuned. I don't know, I believe there's going to be press coverage of that, so if you have some time, it's going to be at noon on Monday. Tune in, and it should be an exciting thing. I know I'm looking forward to it.
Well, thanks, Ralph. I know we did promise you that we would do some updates, professional, what's going on in the profession. And Frank, how about we start off with what's going on with the AICPA?
Sure. Well, Ellen, when I first get up in the morning, the first thing I do?
I don't know.
Okay, so I know, it's kind of scary, right? Well, what I usually do when I first get up is I go to NJCPA.org, because I want to know what's happening at the it is one of the first things I do, yes. And then I go to AICPA.org, and then FASB.org. So I want to know what's going on in the profession, so I'm glad that you asked me these questions.
I'm going to verify that. I'm going to send you a message on one of those sites and see if you really are up.
You can. I mean, I look for the latest and greatest of changes, because we have to stay on top of what's going on. The AICPA recently has a request for comment on the CPE provider standards exposure draft. The comments are due by October 1st. It'll probably become effective January 1st, 2016. And the takeaway here is they're going to change how we learn, and they're talking more about the nano learning, where we're going to learn in 10-minute increments rather than the 1 hour or 8 hours a day. So that was the big takeaway there from that one, and look for that. Now, we're lucky to have Jim Hardenberg, who's the Chief Learning Officer, who also sits on an ASBA task force. So when they come out with these new standards, we're going to be right in the forefront to make sure that our members are getting the right CPE, and we're on the forefront of all those changes. So we're happy to have Jim on board for that.
Absolutely.
The next thing, from the FASB perspective, there's a nonprofit update or exposure draft, and this really deals a little bit about how financial statements and the net assets are reported on a financial statement. I'm assuming and I'm hoping that our not-for-profit standards interest group will be commenting on this.
They are.
Okay, good.
Yeah.
And
actually, we have comment letters on both
right, there
these.
should be both, right. And anyone out there listening, if you work in a nonprofit space, you should really want to maybe attend that meeting that we have. There's a monthly meeting. Go to it. You can call in to get on there. If you're working in that space, you really want to make sure that you're commenting on this and you're getting your views out there, because the FASB really listens to these things. One thing we'll talk about in a minute is the revenue recognition. That has been maybe postponed again because of so many comments that are out there on how to implement this into our practices. So that's an area that you want to look at. The next thing is the CPA exam, as Ralph and Ellen alluded to earlier. There's going to be some changes into how the CPA exam is given and how we're testing our new young CPAs coming into the profession. It's going to be more integrated. Integrated. It's tough. It's early, and I'm still getting over. I got a cough. So we encourage the CPA candidates to take the exam now. Get it done before January 1st, 18. That's when they're planning on having the overhaul change. And since you're already studying, you know the one format, it's hard to go to a new format. Right. They're going to be testing different skill sets. So you really want to try to get that out of the way sooner than later. Some more things the AICPA did is they have a not-for-profit certificate and a section membership. The not-for-profit certificate, again, if you're working in a non-for-profit space, they're going to have 24 courses that are going to give you 40 hours of CPE. Once you complete that, you will have a certificate that says that you are a not-for-profit specialist, right. Which is important if you're working in that space, because I believe we have the DOL right now. The GAO is in the grass looking at us, and I think they're going to come after our single audits and our yellow book audits. So we want to make sure we're in front of that before that train hits us. They also at council, we were all at council in May, the three of us. The AICPA passed new fair value credentials. There's one on business and intangibles and also financial instruments. These are going to be open down the road to non-CPAs to get that credential. The AICPA wants to monitor the information that they are gathering and putting out there for the public interest. So the best place to have that monitored is by the AICPA to watch these professionals. And in a lot of our practices, we're hiring more non-CPAs going forward because of some of these nuances to how you value intangibles, how you value financial instruments. There's a lot of sophistication there. So I think that's important with those two credentials that will be out there. So be on the lookout for that at the AICPA website. I'm sure our website, the NJCPA, will have some discussion about that as well. And then the State Board of Accountancy, some changes there. The education requirements for the exam is going to change. They're going to reduce some of the hours you need in total business. I think they'll go from 60 down to just 48, 24 in accounting, and then 24 in other businesses, other business credits. And then the thing that I wasn't too proud of is the self-study rules have changed. The board wants to now eliminate the maximum number of CPE credits you can take as self-study. And this is all on the governor's desk to sign. That will probably go into effect in a couple of years from now. But the reason I'm not happy with that is that I performed a peer review of a firm that did a broker-dealer audit. And they didn't realize that they couldn't write the financial statements, so they violated the independence rules. When I looked at the CPE that they took self-study on broker-dealers. Now, every CPE course that I've gone to on broker-dealer audits from the PCOB, they've basically said you cannot write the financial statements. You can't even staple them anymore. They want you to be totally independent. I know, they came out and said that. So unfortunately, this firm didn't attend that, so they didn't see that part of whatever that training course was, and they violated the independence rules. The PCOB came in and they're sanctioned them. There could be fines against that firm.
Wow.
And then lastly, the IRS is now changing with all of the identity theft. The IRS is now going to allow victims to get copies of the fraudulent returns so they can see what was stolen. I think that's pretty important. It was a good win for us to kind of, there's a lot of fraud going on, a lot of cyber security issues. Now the victims have a place to get their tax returns, see what was stolen, so that they can try to go back around to fix those issues going forward.
A lot of stuff just going on, I think, and one thing, the exposure drafts that are out, I want to give a real shout out to our A&A committees and our other committees that have responded to these exposure drafts. It takes a lot of time, but back to your point, it's important for organizations like us and for our members to respond, to get the issues out there so that these groups who are setting standards or are looking to set standards aren't operating in a vacuum. So, and I'm so glad we have Frank here today, because he's just a madman on these issues. He's been really
get up first thing in the morning, and I'm on AICPA.org.
So Frank, you did allude, Frank, to the revenue standard. Yes. So the question did come in. Has there been any further discussion on delaying the effective date of the converged revenue standard?
I believe that there's an exposure draft now to delay it, so another year. So I think it comes into effect for public companies in 2017, so looking at maybe delaying that. The issue there is that there's so much information that has to be gathered to put into place for this revenue recognition that businesses didn't really understand all that was required of them. Mm-hmm. So it's very complex area. You're taking 180 area pronouncements in literature, and you're trying to gather that into one place, and they're also working in conjunction with the international standards to make it one place to go. So it's a big undertaking, and it's going to take some time for that to actually get out there and published.
We also have another employee benefit question, and because it has a regulatory impact, it could be Ralph or Frank. Do you think that it'd be wise to require all CPAs who perform employee benefit plan audits to take a certain amount of CE credits on this topic? To me, this seems like a simple way to help solve the problem.
That's a good question, and the AICPA has a quality center for employee benefit plan auditors. And part of that quality center, one of the requirements, you have a clean peer review, but also take CPE, 8 hours of CPE a year on employee benefit plans. So there is that criteria that's out there if you belong to a member. Now, with a study that DOL did, they found that the firms that were in the center had less chance of doing things wrong than firms that were not in the center. Okay. So again, and the reason is because you're taking more CPE, you're learning more, and you're bringing that into practice. So I think that's important going forward.
Yeah, I think they were substantially lower than the rest of the community who were not part of the employee benefit. And that center, in addition to the CPE, they're just the collaboration, the tools and resources that the center provides. I think are all helpful to help help them do a better job really in audit. One thing before we go, just on the changes that for the state board, just want to, on the self-study and things like that, they're not effective yet.
Right.
They're still waiting signature, and I think the best thing, we'll certainly not, we will let folks know when these things become effective. So that's why it's important to go to the Society's website and see what's changing, because we're covering all of these various topics out there and providing updates on that and anything else that we think may be important to our members out there. So
I think we have time for one more question, and it is a tax question, so maybe Frank, you're off the hook, and hopefully maybe Ralph might know the answer to this. I have clients who are still awaiting their New Jersey tax returns. Do you know when they can expect to receive them?
I wish I had a definitive answer on that, but I will say that one of the challenges that the state is working with is back to the point that Frank talked about, was identity theft, and we have that both on the federal level and on the state level. So I know, and we've been in dialogue with the Division of Taxation. They are taking some measures to review certain returns and things that are over with refunds over a certain dollar amount, and then in some instances asking for additional information. So I would say that it's going to take some time. We've had some folks who have called us and they said, they've e-filed and it's been 8 weeks. It is going to take some time. So I think the best thing is to call the advocacy line and try to talk with someone down there. And I think we'll work on that in terms of trying to maybe get a specific contact.
All right. Well, gentlemen, thank you. Appreciate your input today. And that concludes today's broadcast. Thank you for tuning in. And please join us for our next edition of Issues Watch. It will be Friday, December 18th from 9 to 10. Have a great weekend.
Are we done?